All right, all right, all right. We are back on the morning show. Ladies and gentlemen, I am JC Parets, and I am thrilled to be here today with you. Appreciate all the support. You guys are awesome. Love you guys in the chat. Man, do we have a special guest today? Doug Boneparth, one of the funniest guys on Twitter, rock star financial advisor, really get some perspective as to what the hell are all these people so scared about? Coming off some of the most extreme pessimistic levels of all time, having somebody on here who's got his boots on the ground, talking to investors every single day, managing their money. Very curious to hear what he has to say. We got Steve Strazza, Director of Research and Chief Market Strategist here at All Star Charts in the house. Spencer Israel, still on paternity, a few days into fatherhood. I did get a note from him today. Things are good. Family is healthy. We're happy for him. We got a lot to talk about here on the morning show. Hit it, Izzy. Oh, we back on the morning show. We back on the morning show. We got Steve Strazza in the house. We got Steve. Want to bring in Mr. Strazza? There he is. Hello, sir.
Hold on.
Guys, a lot of drama yesterday over in the White House. Man, a day like yesterday is just a great opportunity to see who's serious about the market and who's not, right? A day like yesterday truly exposes the biggest losers on the planet who have nothing better to do than just gossip, write gossip columns, gossip about the gossip columns. Like a day like yesterday truly exposes people for who they are. And also, I would encourage you to identify those who were looking for opportunities in an environment where the losers were busy gossiping. And, it really shows you who's real out there. And there's definitely people that were real, definitely people looking for opportunities. Kudos to you guys and to you, just gossip columnists. You suck. You suck. Do better. Steve Strazza.
Yeah.
How do you, first of all, before we get into this, the family is doing well. Getting notes from Spencer Israel. We want to give a shout out to Spencer Israel. We're thinking about you, buddy. I know we're here to make money. We're here to profit, but Spencer's part of the fam, so we're rooting for you. Glad to hear things are going well.
Slow down. You always try to pressure me into liking these Tesla trades. And what do I always say to you? There's just so much going on with the Tesla. All this headline risk, all this bullshit. It's just a lot that you don't need. Yesterday was an example of why I tend not to trade Tesla stock, right? Some of these headache stocks, they just come with too much baggage. Like, what is Elon Musk doing at this point? Like, what are you doing, man? So yesterday, news comes out that Scott Bessent punched him in the face or whatever, some sort of physical altercation. And then the following day, yesterday, Trump absolutely smokes him and Tesla stock on Twitter. I mean, not good. Not good.
So we've got internally.
CEO.
So hold on. So internally, we've got our naughty list, is what we call them, and our naughty list is specifically designed to have a list of stocks that we don't sell naked puts on, right? At least for me, that's how I look at it. I look at the naughty list. These are like crypto miners. These are things like Tesla. The Trump, whatever the thing is, the meme stock of the Trump.
Tesla's on the naughty list? I mean, Tesla's on the naughty list?
Oh, yeah. Always has been. Yeah, you know that. For the reasons that you said. Tesla's been on the naughty list.
This is Herb's. You're talking about Herb's list.
No. The naughty list that we talk about with Sean, like in the weekly meetings where we don't sell naked puts against them,
Yep.
Have you not been paying attention to every single one of our meetings?
I didn't know that Sean had a list of stocks that he won't sell.
I mean, it's not an actual list that we keep track of. It's kind of like a common sense naughty list. You know what I'm saying?
Yeah.
Huh?
I think that makes sense. Yeah.
Yeah. Where we just don't sell naked puts on certain stocks because of the underlying risk. Now, what that doesn't change the fact we still can get long all these names. In fact, we have. You certainly have. I certainly have. Just because it's on the naughty list doesn't mean we're not going to buy it. If anything, it really helps to manage risk using options. So, like, I am long the back half of my Tesla trade, right? So, whenever we buy call options and the trade doubles, we take half off the table, right? House
Mhm.
rules. You love that. I love that.
Is
Sean
that the
used
way
to
you're
love
doing
that.
it?
I'm
That's
sorry.
awesome. I love to hear that. That's so cool.
I mean, you're
Fuck yeah.
you are one that pounds the table on that. Sean
Yep.
has always pounded the table on it. I have inherited that over the last several years. Um,
Life is
so
easier.
a day like yesterday, my back half of the Tesla trade obviously got hit. I still have several months until expiration, so it's not the end of the world. But let's just say that I had just put the trade on. Let's just say hypothetically, I put the trade on Monday and I got
Mhm.
long Tesla and something like this happened. Well,
Yeah.
you can't lose more than what you invest. So names on the naughty list are prime for an options trade versus something like the common stock. This would be a great example, right? If I had just put on the trade now, you still can't lose more than what you invest, right? So that's why we do that. So on the naughty list, you don't sell naked puts, and you look to trade in the derivatives market versus the common stock, so you can help limit your risk. That's how I think about it.
Yep. When you sell doubles,
Are
you
we buying Tesla, by the way? Can you throw up that slide too, please?
oh man.
You are not buying Tesla here. You're not buying this dip.
Still not. Still a no from me.
I mean, I got to tell you, if we're above 250, this is a long. I think this is a long if we're above 250. Now, granted, we got
Why?
up to 350.
But why not just take the information from the market and agree with me? This isn't a stock you need to trade. Buy it, put it in your long-term
I'm
account. If
only,
things
for
do
the
well,
record,
man, that's great.
I'm only taking information from the market. What do you mean?
Yeah. No, but you know what I mean? Like it's just this is a headache stock. It's fraught with headline risk. Like every day that you're in Tesla and everything's okay is like a huge victory. You don't need
I
that. Why?
guess.
This is a
I mean,
crazy bull market. Show me a stock that working.
In 2023, Tesla was one of the greatest trades in my career. This time, so far, excellent trade. Maybe not the greatest trade of my career, but excellent trade, profitable nevertheless.
Fine.
Like
Fine.
I'm just not
Great.
seeing the problem with trading this. Like we keep seeing success trading this name over the last several years. So
Dude, it's the middle of a bull market. Stocks are hitting new cycle highs. This thing's down 15% yesterday because the CEO is fighting with the president. This is becoming one of those environments where it's getting harder and harder to miss. And I don't want to deal with problem stocks. This is a problem stock.
I'm going to tell you something, Strazza. I respect that. I respect it. I like it. I'm going to keep doing what I'm doing.
Yeah, no, good.
But
Good.
I respect it. I respect what you're saying so much. As somebody who has a lot of headaches, I am constantly talking about avoiding headaches, right? And
Tes-
you are saying exactly that. So I'm not disagreeing with anything that you're saying.
Tesla
I'm
has
with you.
more headline risk than Chinese equities.
Um,
How did that
maybe,
happen? Boy,
maybe.
how the tables have turned too, because the bullish thesis there for a long time for a lot of people was, well, Elon's basically the president.
Was
Things
that the
change.
bullish thesis? Well, I think those people are
Things
just dumb.
change. Notice how that changed.
I
Wow,
think I
they
think
don't
I think
like
people
each other.
who say that's just dumb though.
Should we read some of the tweets because they were funny or no?
Well, can we
The one
get
that
to the state of the markets and then we'll come back to this? The state of the
yeah,
markets.
fine.
Go
Okay.
ahead, Izzy. All right, ladies and gentlemen, we got the Dow futures this morning up almost 300 points. That's 2/3% to the upside, 42,650. Speaking of bull markets and hard to miss, Steve Strazza was just alluding to just that. Dow up almost 300 this morning. S&P 500 futures up 80 basis points. It's 50 points to the upside, pushing 6,000 in the S&P 500. We are a nose hair away from new all-time highs in the S&P 500. Same with the Nasdaq, leading the way this morning, up almost a 4%, almost 200 points, 21,770 here in the Nasdaq 100. Bond futures getting hit though, down 2/3%, under 113 on bonds. Crude oil up 1/4%, 63 and a half. Copper down 1%, 487. Gold flat at 33.70. Silver up 1%, 36 and a quarter. With the VIX still at 17 and change. Over in funny money, things are really moving. Bitcoin up 2,300 points this morning. What a move, pushing 104,000. Ethereum just under 2,500, up 2.7%, 65 points to the upside for the ETH. And we got Solana 151, up 4.5% today. Shout out Solana. And the total crypto market cap, Spencer Israel, if you're out there listening, 3.2 trillion. 3.2 trillion. Steve Strazza, what stands out from this morning's futures?
Commodities.
Yeah, huh?
Commodities.
So
Copper. The volatility in copper as it tries to resolve this coil is really something. Silver's going. So what stands out specifically? Follow through day in silver. That's great. I don't care about gold right now. I'm literally not even looking at it. Copper's still working on this coil. Like mid-morning yesterday, it looked like, okay, we're done. Heading back to the upper bounds. 5 is next. And then a little chop here. And it looks like it's going to take another shot today. And then how about energy futures? Coiled up here. Really coiled up nicely. I think heating oil probably looks better than crude. But maybe that's a little a path for crude. Already kind of back at that shelf of lows from last September. And I think crude is going to scoop and score soon. And I think energy stocks, particularly
let's table the energy for 1 second.
Right.
Sticking with you're not interested in gold at this point, but you're interested in the volatility that copper is seeing as it tries to break out to new all-time highs.
Yeah.
Steve Strazza, if this chart right here doesn't tell the story as to what's happening out there, man, are you thinking that the line on the bottom is not going to do what the line on the top is doing?
I've been thinking it for a long time, JC, and that was an early thought, I guess. But it's go time now. I think silver's really calling it.
I mean, so you think that because silver's making these moves, that increases the likelihood that copper is going to catch up to gold? The fact that silver's working too?
100%.
Yeah.
Yep. I think
I would
everything's
agree with that.
in a nice
more rocks are going up in price. Is that right? Is that accurate?
Yeah, metals are metals, and silver, our smarter friends can argue about how it's basically like a quasi precious industrial at this point. So
yeah, I guess I just don't believe that. I think that's bullshit.
I just don't care.
Yeah, no, I'm with you. Yeah, I don't care.
Like,
No,
that's
that's
cool.
probably right. I don't believe it, and therefore I don't
Silver's
care.
in this. It's neat. It's like platinum's in cars. Cool. That's why people steal it, I guess.
Yeah, I don't think it's not how I think about it. It's kind of just like a crazier gold is how I look at silver. But what I will say is when you study these secular advances in the market and you see gold making new highs, like copper doesn't diverge for too long. I would argue this is one of the longer divergences, right? But man, if the line on the top is going up, you're going to bet that the line on the bottom ain't. I'm not.
And the big development yesterday was intermarket confirmation. We had some major risk appetite confirmation in the metal space yesterday. We've been watching the silver and gold ratio. I wrote a post about silver. Silver's leaving the station, I don't know, 3 weeks ago. And I said, you're going to know it when it happens that it's real because this other thing's going to happen at the same time. I said, the silver gold ratio is going to snap higher and print a bull hook and fail this top as silver's breaking out, if the breakout's real. Do you know what happened yesterday? Do we have the silver gold? What a banger in the silver gold ratio. Holy cow. That doesn't even have yesterday's data. This thing hooked higher like an absolute monster.
Yeah.
And me, it supports the price action in spot silver, the absolute price chart, as good as you could ask for. That is your confirmation.
We've been talking about this silver gold ratio for a long time. Is this it?
Yeah, that's it. Yeah.
That's it. And then so the only thing that could invalidate that thesis is a swift reversal in the near term back below those levels. Do I have that right?
Now it's updated. Look at that. Bang.
So what would invalidate this bullish thesis in silver over gold and what would suggest that this secular trend higher in precious metals should continue if now silver's outpacing gold? The only thing that would invalidate that is to break back below the 22 lows. Do I have that right, Strazza?
Yeah.
Yeah.
Yep. And you're seeing other stuff too, like juniors relative to gold producers, big base breaking out, all the risk appetite ratios are breaking out. I think you want to be like hardcore about it. If you're trying to make as much money as possible off this trend, you go buy the junkiest silver miners. Like you see like what a stock like AG did yesterday. Some of these completely unhedged silver freaks, there's a bunch of them out there. You could find them. Go buy those. They'll be up 1,000% if silver's up 100%. That's just the way it goes. Um, and lean into the risky stuff. Yeah, why not? Precious party.
I want to talk about international.
Well, you don't want to talk about energy, apparently.
Oh, sorry. I do. No, I do. Let's get into the energy before we get into the international. Good call. My fault. I asked a question yesterday in the meeting because we were talking about you specifically. We're talking about natural gas stocks over crude oil, natural gas, the commodity over crude oil, acting better. A lot of us agreed, and I threw out a very simple question, being ignorant, and I'll prove to you just how ignorant I am when I said, "Well, then what is the best natural gas stock?" And all of you at the same time just yell Comstock, duh, CRK,
Yeah.
Comstock. So I own Comstock, and I own it because I thought it was an oil play. It was like energy, but like leaning oil. I didn't realize it was more of a natural gas pure play. Full disclosure, full disclosure. So when you guys said that, I was both happy and disappointed. I was happy that I owned the stock that you guys all loved, and I was disappointed because now I just still need more natural gas
Yeah,
exposure.
so I think you go to the big boys then. Go to the blue chips. Like I've always anchored my nat gas stuff with two companies. That's LNG and KMI. LNG just longtime industry leader, really the innovator in the liquefied natural gas space. They dominate. And then KMI, man, this thing's been on a tear and it's still paying a 4% yield while it climbs up the right-hand side of this base. So that's more of an MLP situation. But those are two big nat gas names too.
And then one of the ones that stood out here. Let me drop this chart here. I thought this was great. We talked about it yesterday in the conference call. Getting some love today from yesterday's conference call. Throw up if you guys can throw up the new slide too. People love that it was concise. I had only 100 charts on the conference call yesterday.
New lows. New lows in chart deck.
Well, it was a monthly strategy session, right? The mid-month, we dive into themes, and it was really just more of a zoom out sort of process. But I thought this was one of the more interesting charts, talking about gold, talking about silver, talking about copper, and now bringing it to energy. This was the chart that I laid out. Walk me through what you see here.
Kevin, good morning from Lakeland. Shout out, great state of Florida. What's up, Kevin? Me gusta la gasolina. What?
Do we have another Florida man? Are you guys having like a Florida man bromance here? Is that what's happening?
Me gusta la gasolina. Look, it is the strongest one, holding up here at this big old support zone. Heating oil's trying to hook. It's basically right there. One green candle gets it done. And the same with crude. Crude's right there, coiled up so nicely. While the rest of the commodities complex is just going bonkers. Crude's sitting here like, I dare you to short me. I dare you to short me. That's what crude is saying to commodities traders right now. Do it.
Is that what they're saying?
Do it. If that's the bet you want to make.
Can I do something now?
Always.
Can I do something?
Yeah.
All right. All right. Now let me do it.
Oh, he's got charts. He brought charts. Somebody brought charts today.
All right. Who's the chart master flex out there on the ones and twos? Is it the
Fonz?
Fonz?
Ninja.
Guys, I want to remind everybody, we're gonna get in. I'm gonna do something. I'm gonna do something so fancy. You guys are gonna love it. It's gonna be super fancy. I never do this, never do it, but I'm gonna do it today. I want to remind everybody today at 1 o'clock, we have a live event where Steve Strazza, Mr. Commodities now all of a sudden, like every day, Strazza just wants to talk about commodities. I'm not gonna lie. I like it.
JC,
I like it.
I kind of like it too. I'm having so much.
Where has this been? Where I've been waiting for this moment. I've been waiting for this
commodities,
moment for all my life.
Being real, commodities have been dead money for 2 or 3 years, right? They're waking up now, so it's exciting. We like things as
This is the first time in Strazza's career that commodities are working, so he's stoked.
Yeah, right. We like things.
No, is that not true?
No, dude. I came back in my early days. It was all about commodities. They worked really well for like 2 years until they never did again.
Got it. You caught the
Yeah,
tail
I
end
have
of that one.
scars.
Got it. Got it. Got it.
2010, 11. So, but no, but being real about it, it's commodities when they trend like speculative growth stocks. They are a lot of fun. There is plenty of juice there. You could trade the hell out of them. They have really high beta, super risk. You could go out on the risk spectrum, right, and find some funky stuff in the equities market to make bets on a lot of these different commodities. And frankly, we're just taking the feedback from the market, which has been saying to us for, I don't know, a month and a half now, do more of this. You could say all year with gold. The market's been saying more commodities, Steve. So we're listening. And I said to the guys, I need an extra hour this week just to rant about commodities because there's that much to say. And we want to get ahead of the next gold, the next silver, the other ones that look like copper, right? Because there are a lot of opportunities out there. Commodities is a broad space. We're going to go through about 30 contracts today and really go over it, just full playbook. I'm very excited.
So, guys, click the link 1 p.m. with Steve Strazza and the All-Star Chart CTA, Mr. Jason Purrs coming in hot. Yeah. All right, guys. So I want to go over a few charts. Give me one second. Guys, if you want.
Gainesville. Nice.
All right, you want to start with slide 7 there, please? And we're just going to roll right through them. We're just going to rip right through them. Just kind of get the feel, you know? If we had some tunes. All right, Canada, new all-time highs. Not a lot of tech there
so good.
in Canada.
So
big difference. New all-time highs there. A lot of natural resource exposure. Just give me one, guys. Give me one second.
New all-time highs, eh? That was it. That was the joke. And he's back.
All right, guys. All right, we're back. Let's go. We got Canada hitting new all-time highs. Hit it, Fonz. Keep it rolling. Keep it rolling. London FTSE 100, new all-time highs. London FTSE 350, broader measure of the United Kingdom, new all-time highs. German DAX, new all-time highs. Keep it going. Keep it going. France, pushing up against new all-time highs. France ETF, all-time highs. Keep it rolling. Look,
who's
just
having
keep going.
fun?
Look, Eurostock 600, all-time highs. Eurostock 50.
Viva Italia.
Oslo, shout out Oslo. Swiss markets pushing up against new all-time highs. Sweden. Shout out Sweden. Brussels, new all-time highs for the Bell 20. Amsterdam, shout out to the Dutch out there, new all-time highs. Austria, new 17-year highs. Spain, highest level since the great financial crisis. Shout out to the Irish. Ireland making new all-time highs. Greece hitting new decade-plus highs. Continuing to act well. Shout out Poland. Wow. Poland keeps doing well. Shout out to
Zloty.
The Warsaw 20. That's right. Zloty continuing to act well. Israel, new all-time highs. Shout out South Africa. Johannesburg index making new highs. Egypt, new all-time highs. India pushing up against new all-time highs right there. You got Hong Kong hitting new multi-year highs. Shout out to China. Taiwan doesn't look bad. Overlaid with those U.S. semis, looks pretty good. Pretty good. Here's Japan, priced in local currency, Japanese yen, making new all-time highs. But wait, there's more. When you look at Japan, priced in dollars, also making new all-time highs. Keep it rolling. Let's go. Australia, pushing up against new all-time highs, ASX 200. There's Chile, new all-time highs. You got Brazil, Bovespa hitting new all-time highs. Mexico, new all-time highs. Peru, new all-time highs. And of course, Earth, new all-time highs. Shout out Earth.
And this is why it is obviously the end of American exceptionalism. Am I right? Is that the right takeaway?
This is probably those were some pretty good charts. I'm not going to lie, right? But this one's the best one. Those are great charts. Shout out to me. Shout out to the team.
Made. It's looking good out there.
But this is the one. This is the one. Daniel with a shout out of Johannesburg. Shout out Johannesburg. We have the MSCI All Country World Index ex-US. So this is Earth without America. hitting new all-time highs. And then, of course, Earth with America also hitting new all-time highs, reiterating that it's not an American bull market. It's a bull market for Earthlings. Shout out, Earthlings.
Love it. Really good stuff here. For the
You
whole
like
world.
that, Strazza? You like what I did there?
New all-time highs. Just spin it.
Oh,
New
somebody's got a
highs.
globe.
New highs. New highs. Big old base breakout.
All right, so let me
Yeah.
ask you this. Now let's pull
Okay,
it
pull it
back.
back. Yeah,
Let's
yeah,
pull it back.
yeah,
We got Doug
yeah.
Boneparth coming in. Just let us know when Doug's in the green room. I
Compose ourselves.
I want to ask you. Let's take a
Sure,
step
sure,
back
sure.
for 1
Oh, we got
second.
Louis too. Hey,
And
Crypto
we got
Friday.
Louis in the house.
Hello.
Crypto Friday. Shout out
Crypto
Crypto Friday.
Friday.
Oh, bring out the hodl shirt. Bring out the hodl hat. Let me ask you, Strazza, when you look at some of these countries and Japan, it's making new highs in both
Mhm,
currencies, but something like Latin
mhm.
America, where things like Chile and Brazil and Mexico, priced in dollars, are not making those kind of gains
Yeah.
yet. Got it. So you think that price in local currency here, that's a leading indicator. You're going to see that in America. Is
Not so much that
that what's
it's
happening?
not so much that the charts in local currency are a leading indicator. For a lot of these country ETFs, the currencies is going to impact the price action and the performance even more than the local stock market, just due to the volatility of the currencies. So I'm even more interested in just these big reversal patterns that we're seeing left and right in currencies against US dollars all over the world. In emerging markets, in developed markets, in Asia, in Europe, now in Latin America. You're just seeing it everywhere. So when I see something like the Real fail a little distribution pattern, scoop and score back into a range, I'm thinking this thing is heading on to a new uptrend. Eventually, you're going to have a nice reversal pattern in place here. Then I want to own the hell out of those country ETFs. You got to look at the currencies too. Look at the local stock markets. They pretty much all check that box, though, as JC literally just showed you in 3 minutes. Then look at the currencies.
Was that 3 minutes? That's how long it took me? I thought I did it faster.
I feel
than
like
that.
you've done that before.
Yeah, I do that once a month. Can we all right, let's take a step back. It is Crypto Fridays, ladies and gentlemen. I know that I am here in beautiful Avalon, New Jersey. Amazing location, good eats, good people. And Steve Strazza down in Key West, and we got the Trump and the Elon with the bromance and the breakup,
Crazy.
and the New York Post. I
Go
get
to
it.
the beach.
But it's Crypto Friday at the end of the day. Cryptos are flying. You got Bitcoin up 2,500 this morning. We got Louis Sykes in the green room. Bring him out. Bring him out.
Got my fingers on the pulse, avocado and toast, leather seats, jet plane, always ready to go.
Morning, JC. How's it
Ludo.
going? What's in your coffee this morning? The energy coming from this room is just exuding.
There's something to be said about jumping in the ocean. As a gentleman who has lived his entire life on an island, would you agree with that?
I very much agree with it. Look, I'm right next to Antarctica, right? So every time I go on the ocean, it's like a cold plunge. You go in the ocean and you just feel brilliant. I love it.
Let me ask you this. So it's super cold in the South Island, but what about in the North Island? Still just as
North
cold?
Island's beautiful, particularly in summer. I mean, you're getting like 30 Celsius degree days. Not sure what that is in Fahrenheit.
Us Americans don't know what that means.
Yeah,
bro.
I'm so sorry about that.
30 Celsius. What the fuck is a Celsius?
It's not my fault that you guys use a little bit of a weird system over there.
We'll go with that. We're the weird ones. Sure, we'll go with that. Lou Dog, 2,500 this morning on Bitcoin. That's not nothing.
Not nothing. I mean, look, we failed to hold this breakout. I think this is more of a failed start than a failed breakout. You just went through all these international charts, which is just I love that. I've been talking about international now for as everybody for the longest time. So that
How come New Zealand didn't make the cut?
New Zealand didn't make the
make
cut. I'm not sure what we're doing over here. I mean, we're just messing around with sheep, and it's kind of hilarious, right? I go to New Orleans, and you guys are talking about building nuclear reactors for artificial intelligence data centers, and then I come back to New Zealand, and we're just like bickering about sheep, and so it's like no wonder that we're being left behind. And so
But I got to tell you, the New Zealand 50 index, putting in a nice multi-year base there since COVID. There's potential. They got work to do there. Those Kiwis.
I know. They struggle doing work over here, JC. And so you got Bitcoin failing to hold this breakout. I think this is more of a failed start, right? You got this tremendous risk appetite around the world. And so are you going to tell me that Bitcoin is not going to break out? And this is just the end of the cycle when you have Greece literally closing in on all-time highs on a dividend adjusted basis? Like,
I know,
no.
but what does Greece have anything to
It's it's
do?
it's
What does
it's
Greece
a
have anything
broader
to do
risk appetite theme, right? Where risk appetite around the world is just tremendously intact, and so crypto now more than ever is highly correlated with what's happening in the macro market, and so crypto is being literally repackaged by Wall Street to disrupt the very system it was meant to disrupt, right? And so Wall Street is absorbing it. You got the Circle IPO, right? And so it's becoming more integrated with what's happening in the broader equity markets, right? So
Louis, quickly,
sure.
Louis, yesterday in yesterday's meeting, you did a great job of explaining Circle. You know, I knew of it, I own it, like I've used it, like just interacting in DeFi and stuff like that. But the way you put it out, even someone like me, who I'm pretty sure I knew more about Circle than anybody else in that meeting, but you really schooled me big time. Can you share with the audience exactly what you said yesterday in the meeting? I thought that was great value add.
So Circle, they are the creator of the second largest stablecoin in the world, the USDC stablecoin. It's got a market cap of about $60 billion. So $60 billion is held in the stablecoin. And their business model, they're literally just earning interest income on that $60 billion. But they're like a bank, right? Where a bank, they make interest income on the money that they receive from their deposits, but then alternatively, they need to pay out interest income and they need to finance other companies, right? And individuals. Circle doesn't need to do that. They just collect the interest income, but they don't really need to pay any interest out and interest expense to anybody else. So they're basically just a free money collector. And then on top of that, they're all obviously clearly disruptive to the current antiquated financial companies like PayPal, Mastercard, Visa. Right? You tap your card on the FPOS machine, they charge you a 1 or 2% surcharge. It maybe takes a day or two for the payment to clear. With a stable coin, it settles instantly. And so it doesn't obviously run on the system that these traditional financial companies have built. Obviously, if you're paying on stable coins, it runs on the blockchain, so you don't actually need that payment infrastructure. And so they've got the technology, and then again, they've clearly got the reserves that they're just earning free money off. I mean, the only caveat is, I mean, we're talking about right now a market cap. Let me see where the market cap is. I just want to make sure this is accurate because look, these shares, one of the most popular and crazy fintech IPOs in recent times, literally popping 200% in a single day in its first day of trading. And so,
So this would be considered fintech.
um, yes, I'll consider it fintech, crypto.
Yeah, that's probably right. Yeah, that's probably right.
Yep. Um, Let me just pull up the current stats just because the market cap is changing just so fast here. But what are you thinking about this? You know, we had that chart that I just pulled up where every time we get these major launches, right, like the Coinbase IPO and all these futures launches and the CME futures launches.
Do you think this qualifies as one of
I
those?
mean, look, it's definitely a sign that things are getting a little bit frothy, and this generally aligns with my broader view where we're entering into the later stages of this bull market. Um, and so, you know, if you just look at the numbers here, that Circle is trading at about a 16, $17 billion valuation. Last quarter, they made a net income of about 65 million. And so that valuation, just from a PE standpoint, is obviously, you know, you're paying 70, 80 times earnings, right? And so, I mean, it's certainly not low by any means, but you know that the market's clearly pricing in a lot of growth for this. I know that Standard Chartered, a lot of financial institutions, they map out and they project where the stablecoin market's going to go. I know that Standard Chartered put out a report about a week or two ago saying that the stablecoin market they expect to grow tenfold in 3 years by 2028, and so there's clearly a lot of growth being priced into the stock right now.
Yesterday in the meeting, you were talking about how some of these consolidations are breaking down rather than resolving higher. But you're in the camp that this is more of a false start than an epic failed breakout where everything's about to collapse. And what leads you to believe that?
I mean, again, it just comes back to what's happening just around the world. Just more stocks continue breaking out. And then again, when we just look at my cycle analysis, we run a lot of cycle analysis when it comes to on-chain data. And again, we're still not at frothy levels, right? The bull market tends to end when the average Bitcoin investor is holding about a 3.7 to 4x return on their money. So in other words, the average investor is up 4x on an unrealized basis. Right now, we're sitting at about 2.5. And so we're actually not all that frothy from just like a profitability standpoint. We've got good inflows happening. And so is the cycle going to end here? I mean, to me, it just seems like there's still more upside to go. And again, we actually haven't seen that massive speculative end really take off. Bitcoin has really been leading this entire bull market, and the rest of the altcoins and the crypto stocks, which are more levered, have just been really underperforming this entire cycle. And so again, it doesn't really have the hallmarks of this classic speculative top break. And so I still think there's plenty more upside. And so I think this is more of a false start than a failed breakout, and then we just never retest these all-time highs again.
We were together, you and I, and a bunch of the crew down in New Orleans. I mean, what was it, a few weeks ago? And one of the things that I was saying pretty confidently was that Bitcoin dominance had peaked forever. Like, I was throwing that
We
out there,
were.
and I was getting some looks. Remember, you were like, "Yeah, forever," and I'm like, "Forever," right? And like, whatever. Like, it's not a trade that I'm literally putting on, right? It's just kind of like thinking through the market environment. But I really did believe that, and I kind of still do. But boy, is that Bitcoin dominance continuing to climb? Is it not? I mean, granted, we're still below the May highs, but doesn't look terrible. So should you think that I should be taking back my thesis that Bitcoin dominance has peaked? And for those of you wondering what Bitcoin dominance is, this is the value of Bitcoin. This is the market capitalization of Bitcoin relative to total market capitalization of crypto, which right now is at 64%. So in other words, Bitcoin alone represents almost 2/3 of all of
I
cryptocurrencies.
think if you're a
Um,
long-term crypto bull, you want to see Bitcoin dominance cut in half over these next few years.
yeah, that's right.
Yeah.
Yeah, that's what I'm thinking. And then, up until now, it's really been an Ethereum story. So if Ethereum's underperforming Bitcoin, Bitcoin dominance is going to keep running. I think before this cycle is over, I don't think that's going to be the case anymore. And you're going to have others like maybe Binance and Solana and, maybe another one that we don't know of yet, really eating into the Bitcoin dominance where it's not just an Ethereum thing, right?
I mean,
You
what
think that's probably
what
right?
what what does that say for an asset class that's maturing where one asset makes up 65% of the investable market cap? That's not a great look,
Yeah.
right? So you want to see as the market matures, you want to see more offerings out there because it's, 2/3 of the investable market. That's just crazy.
Yeah, Ethereum right now is sitting at 300, and so that represents less than 10% of total crypto. So Bitcoin represents 2/3 of total crypto. You guys check my math. What's Ethereum? 9%, whatever it
Mhm,
is. Just for perspective, and then nothing else is even close after that,
mhm.
right? So I think that this cycle is probably going to eat into it. I like what you said there, Louis, that if you're a crypto bull, if you're a Bitcoin bull, you're looking for that Bitcoin dominance to potentially get cut in half. I think that's right. I think that's probably
Yeah.
right.
I mean, look, if you're talking about, 10, 15 years, then you probably want to see that closer to 10%.
Do me a favor, throw up that slide 3 one more time. I think this was a great chart. Well done there, Louis.
Nothing but good charts around
This
here.
one really shows the peaks that we have seen throughout history in crypto when, whether it's the Coinbase IPO leading to the peak, or whether you're looking at futures launches, or Bitcoin ETF options. I mean, all of these turned out to be short-term peaks. A Circle IPO, to your credit, kind of fits within that theme, right? But it doesn't mean none of these were permanent highs, but certainly local highs, right?
They were, yep. So, yep, it'll be interesting to watch, and it'll be another classic case, right, where another big launch, market tops. I think, I mean, dangerous last words. I think this time is a little bit different, but We shall see.
All right, last chart. I want to throw up the slide too there. We skipped over. We talked about Australia. We talked about some other countries out there in the Pacific. We didn't mention New Zealand because New Zealand's not pushing up against new all-time highs, but it's not doing that, right? It's got some work to do, but I wanted to give New Zealand a shout out. Shout out to
Thank you.
Louis. Shout out
Appreciate
to
that.
Louis.
Appreciate it. We're trying our best over here. I'm working really hard at the bottom of the world. I'm trying to make this chart break out with how I'm working every single day. So, here's hoping we get there.
Yeah, I'm hoping that the NZ50 index also makes new all-time highs, so we can start including it on that list. Lou Dog, appreciate you being here, my man. Having a great hair day, by the way. Great hair
Thanks,
day.
JC. Appreciate it. You enjoy the beach over in
Well done,
Avalon.
sir. Adios. All right, listen, we got Doug Boneparth here today with us, rockstar financial advisor. Doug is the man, one of the funniest guys on Twitter. We are thrilled to have him here. Bring him out, bring him out.
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Wow.
All right.
Wow.
I was about to give you credit for you having such a great hair day, because you usually do.
Having a bad one.
It happens. Even to the best of them.
People get upset when I'm wearing a hat. It's pretty wild.
I mean, I am one of them. Here we are. I was about to give you credit for having such a great hair day because Lou Dog came in hot today.
Underperformance at its finest.
Yeah. Doug, some people, are very unfortunate in life and might not be familiar with who you are, which I can't imagine how that would be possible. But why don't you school the folks and let them know why you're the man?
You flatter me. So I run a wealth management firm called Bonafide Wealth. I tell jokes online, but my day job is actually helping people make smart decisions with their money. That's what I love to do. We're getting a lot into helping couples make great decisions with their money. I think that's an area of personal finance that's largely untouched. Like, people don't know how to talk to their partner about money. I want you to have a great relationship. I actually want you to stay together forever, and you better be able to talk about money. So those are the highlights, JC.
No, I love it, Doug. And one of the things that I love when we chat is you give us perspective as to what people are talking about. I am very interested in what your households are worried about. I'm very interested in what your households are not worried about. Right? Let's start with what they're worried about. I just ran through a series of charts. I'm not sure if you were here for that. Were you in the green room when we ran through all the international?
No, for about 5 minutes before 5 or 10 minutes.
Got it. I'll send you the clip. I must say it was a great 3-minute session. One of the best 3-minute sessions of all time. I must say, I'll send you the clip so you can see it. But at the end of the day, what we were running through was a series of countries, and I wasn't cherry picking continents here. We're going through Europe, through Asia, Africa, Latin America, new all-time highs across the board, Canada, S&P 500, NASDAQ, just a percentage or two from new all-time highs. Despite all of that, lot of war rewards out there in the marketplace. Very curious to hear your thoughts on what people are. We'll get into what they're not worried about, but I'd love to hear what they actually are worried about.
Yeah. So when I talk to my clients, I think the number one concern, and it's been their number one concern probably for a long time, you got to understand the core demographic I'm dealing with. 40-year-old older millennials. It's their jobs. It's their ability to get income in the door. I think that's what makes them worry. Are they going to be able to keep the income faucet going? Everything stems from that, right? Like, they can deal with market volatility. They can deal with volatility in their life. And I think they're getting a healthy dose of both of those things. But when the income faucet turns off, that's when, the pressure's really on. That's why we talk about having those cash reserves. They don't want to take on debt. They don't want to eat assets. More importantly, they just don't want to have to worry about where that next paycheck is coming from. So that's the foundation on which I think all anxiety for my clients is founded. I think if you go talk to boomers, you probably have a very different, set of concerns. They're probably focused more on their portfolios than, let's say, your millennials and Gen Z. They really want to make sure that they can continue to play the game. Getting out of that game, especially if you got kids and a mortgage payment, like, you hit this period of life right, where the responsibilities have gone up, 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 yeah, you're going to need that income to continue coming in the door to really deal with that. So that's the number one concern.
What are they not concerned about? What are they just assuming is going to keep working?
Yeah, they assume that they can quietly compound their wealth over time. Like that foundational belief of how capital markets work lives, it's very healthy within them. They you know, they're cool with it. I've watched them all white knuckle volatility, you know, just this year, in April. I've watched them do it in March of 2020. Right. I've watched it. And maybe it's because we entered the workforce and started our adult lives in like 2008 and 9. I think there's just like a little bit of trauma built into our lives that allows them to be like, hey, this isn't as bad as 2008. So why worry about that? Right. Like that's where and you know, not just the markets, but that's where everyone lost their job. So when your baseline of fear is something as drastic as 2008, you know, you can either live by that or die by that. And I think a lot of them are living by that. And I'm speaking again, and I'm very aware that I'm probably talking to like the upper quartile of those who actually did well during this time period and got ahead. I am not oblivious to the fact that there are a lot of people who still didn't, you know, take advantage of low interest rate environment, being able to refinance their student loans or take advantage of, you know, home prices not going parabolic and actually get into the game. I'm very aware of that and very sensitive to that.
A big theme around here, for good reason, has been commodities. Gold absolutely ripping. Copper pushing up against new all-time highs. A lot of these metal stocks, Latin America, you know, just a lot of basic materials. Canada, a lot of natural resource exposure there, doing really well. Investors, from what I can tell, have zero exposure to natural resources, particularly in America, where you've got the S&P 500 only has 3% exposure to energy, only 2% in materials. Dow is even less than that. The NASDAQ is a zero, big donut for natural resource exposure in the NASDAQ. Other countries, most other countries, is very different. So when you look at American investors and their irresponsibly, and I say irresponsibly, that's worked in their favor for a long time. Mine as well, by the way. I own index funds in some of my portfolios too. So I've certainly benefited from that. But I will be the first to tell you that the irresponsible exposure to mega cap growth by American investors really stands out. And when you flip that on its head, the irresponsibly lack of exposure to natural resources, I think, is a problem too, and could cause a major squeeze. Can you talk to me about, you know, what your households that you talk to are thinking about that? Like crude oil going to 200? I think that's on the table. You know, how do these portfolios move forward without that exposure? What are you doing about it? What are you talking to people about it? Really want to hear your
Yeah,
thoughts.
that's a very specific sleeve to be incorporating in people's portfolios. And you're not wrong. Like we're hoping to get that through just the broader based investment. I'll be honest with you and tell you, I don't have too many clients who have that natural resource ETF in there.
I'm not surprised, Doug.
I mean, you're absolutely right. Financial advisors looking at, let's say, an 80-20 portfolio and saying, you know, I really should stick a 5% sleeve of, you know, natural resources and commodities in there. It's just not something that comes out of our mouths unless that advisor themselves is like really studied up or really, you know, has a story that they believe in around that. And I'll give you an example, like my story. You were just talking about Bitcoin a second ago. Like if I had to choose for a client that has $200,000 in a qualified account or $500,000, very different story than someone with $5 million in investable assets who can say, all right, where's my alt allocation going to go? I want some hard assets. I'll throw the gold and silver and copper in there. We want the commodities and natural resources. When you're down at that $100,000 level, let's say, you're going, all right, let's get these core asset classes in here. Let's get the client to be consistent and disciplined so we can get to the day where we're looking to add exposure to those types of things. So I think for a lot of advisors like me, we're just not going to spend a lot of time there. And that could be to our detriment on any sleeve that's really going to provide non-correlated returns, be defensive in their portfolio. And again, I'll come back to Bitcoin here. I would love to see that being part of our core portfolios. And it's something we are going to be adding because there's our hard asset there. I view it as a commodity. It's obviously very
Is it though? But it trades like the Nasdaq.
It does. I'm very excited.
Aren't you just adding more tech exposure to a portfolio that already has
If you're
too
looking
much?
at Bitcoin today and in the short-term past, or pretty much all of the past of Bitcoin, yeah, you have a levered Nasdaq asset here, but you're believing in the story that
Yeah.
it decouples. You know, they kind of throw in a little bait out.
But there's no evidence. There's 0.0 evidence of that whatsoever. It is literally an extension of the Nasdaq, a little further out on the risk curve, and there is 0.0 evidence of anything else.
Things can
No.
change, JC, and I hope they do, and that's the story, right? Nothing.
Yes, and maybe the Knicks will finally win something, and maybe the Dolphins will finally win a Super Bowl, and things could change, but they haven't.
Panthers could win another Stanley Cup here. I think we both get
Cubans don't know anything about hockey, bro.
true. But back to like what you were saying about, you know, there being natural gas specifically in there. I just don't know how deep I can go with that, and whether or not I'm going to say, hey, you know, for our book of business, for our clients here, it's very important that we, you know, start to do that research to put that into core portfolios. We will look back and say, man, JC was spot on. It should have been, you know, going around the board to clients to say, hey, this is something we have to have in there. And by the way, we're very disciplined, broad, diversified, you know, investors. I'd like to think we have exposure to just about everything. I would talk more about, hey, you know, the story that's been sold to most investors has been go chase large cap growth. I mean, I looked at the models at the beginning of this year from practically across Wall Street. Our process is, let's go see what Wall Street's saying, right? They're like, oh my, what did we see? We saw a 10% underweight of international, you know, developed for the most part in favor of US large cap. That was where the street wanted investors to go. And over the last 10 plus years of my career, I have never seen risk adjusted models sway that much towards any one asset class. I could not understand how I would even share that story with clients to say, hey, yeah, we really need to underweight, you know, our 27%, you know, exposure to both, you know, international developed and emerging markets, and reduce that by 10% because Mag 7 is the market. Like, investors have been convinced that the market itself for, you know, in all asset classes is Mag 7 stock. And that story did not come through this year. As a matter of fact, it was the international developed and emerging market piece that came through this year. So I'm not going to take a full victory lap on that, because how long have we been waiting for international to do something in a diversified portfolio? But this is, again, why when you look at those Ibbotson charts and you see how long it could take for EM to get back to the top of the chart, or international to get back to the top of the chart, these are the moments in which we are glad we have that, because you got the retiree calling you up thinking they're down 15% year to date just by reading headlines, not even looking at their portfolio. They just think, oh my God, the market's terrible. And they're up 2% on a 60-40 portfolio. So, I mean, do with that what you will, but I think boring, slow and steady, quietly compounding is again proving to be something that investors can get behind and actually work towards their goals with. But hats off to everyone trying to figure out what's going to be the next breakout or what's going to provide defense in volatile markets. You know, I have immense respect for those playing that game, because it is hard. And for the record, I think doing very boring investing, dollar cost averaging into a very boring risk adjusted portfolio, I think that is really hard too. I think getting anyone to do something consistently boring over a very long period of time goes against human nature. So, you know, if you can get that right, congratulations, you are going to compound your wealth over time. Can you do better?
Doug, you know what I think an answer is to do some of that. I do some of that. I have the most boring portfolio in the world, but I have other strategies in other portfolios that do other things, right? So I have the boring, and the boring does well, right? So I am literally see the boring doing very well,
Make that
and so I'm focused on
make that the bulk of your discipline. You want to grab 10-20% of your investable net worth, depending on, you know, what your tolerance is here, and you want to go try and generate alpha on your own because you have high conviction around, you know, tech or natural resources or whatever it is you think you want to get into. You're probably not going to blow yourself up as long as you're remaining disciplined over here, go for it. What I see with clients who do that, they either learn a valuable lesson and, get a 40-50% drawdown on the things that they were picking, and they're like, hey, I don't want to do that again. Great. They'll go over to the core strategy that they had in place, or they'll try again. Or best case, they crush it. They'll scoop those earnings off the top, those gains, dump them into their strategy, and go at it again. I mean, it's just so there's discipline again showing up even in the folks who are trying to generate alpha on their own. And I love it. It scratches an itch for them, but you don't even need to do that. You can literally play the boring game and go reinvest your time in chasing your kids around the yard and having fun on your weekends and weekdays. This is all good stuff.
Listen, I know you have a heart out. I appreciate you joining us. A lot of people out there, can use a lot of help, and you are certainly one of the best at that. Any words of wisdom that you can offer, just generalities that might apply to all of us, regardless of age, time horizon, objective, risk parameters? What's one good piece of advice?
Piece of advice is get good at playing long games, and especially getting good at playing long games under the stuff you would file under self-care, right? And by the way, that's health, that's exercise, and that's your money too. Like, it's not just investing for the long term and getting good at the boring stuff. If you're in a relationship, get good at communicating with your partner about not just your money, but your goals. These things need to be approached time and time again. I'll say this: money, for whether it's an individual or couples, this is not the game that you win. And it's not a game you play once. You will play it for your entire life. It will change because your life is fickle and things will change. So get good at it. Get good at that and watch your happiness go up. Watch your relationship improve. Watch your life improve. I guarantee it. In a world where there's few guarantees around investments in the capital markets, right? Though you put that aside, you go to the gym one time, you're not going to be in the best shape of your life. I promise you, you go to the gym every day or 5 days a week for 6 months, I will guarantee you're in the best shape of your life. Now apply that logic to how you treat money and investing, and you'll probably be in the best shape of your life as well. Play those long games, get good at it. The short-term stuff, go have some fun every now and then for sure. But keeping the end in mind, that's truly how you win and have an amazing life, and you all deserve that.
I appreciate that so much, Doug. That resonates a lot with me. I get it. I hope you guys are out there listening. Doug Boneparth, you are the man, my
Happy
friend.
Friday,
It's been too
everyone.
long. We got to get back sooner.
All right, JC, I love you, buddy. Have a great one.
No hats next time. We got to show off the hair, bro.
See you later.
There are guys out there that we are friends with that are very jealous of what you got going on there. So that is a true story. That is a true story. What do you say we do a little recess and get out of here, huh? What do you say? Strazza, would you like to go first and tell everybody about all your birdies?
Moving fast out here today. A lot of birdies this weekend. We'll talk about it. A lot of beach talk, too. All my friends are at the beach. So I woke up in the middle of the night last night. So I come to my desk and kind of like check on my Twitter, see who's sliding into my DMs. I got a DM from a longtime customer and client. He said, BOX is on a generational heater, brother. And I thought to myself, God, you're right. So then I measured our open exposure, and we have by far the most free ride open exposure, which is just stuff that we sold doubles on, and now we're sitting in half a position open until whatever, a month, 2 months out, which just means we got tickets, we got seeds planted all over the place, good exposure. I'm good with our portfolio. I think I'm just going to go to the beach for a couple days. I'm just going to go to the beach. Because there's nothing I could do at this point to make our current exposure better. Sometimes you just got to let them work. You just got to sit back and let them work. And that's where we're at right now. So I think I'm going to join you a couple days at the beach. I think we're going to shoot over to St. Thomas. It's just like take a boat there from here.
I would take a plane.
If anybody knows, would you rather stay in the Maggins Bay area? Like, very nice. I get that. You could swim with the sea turtles. Or like the Sapphire Beach area, which I know, it could get a little hood in St. Thomas, the Virgin Islands, JC, in the wrong neighborhoods, but it's cool, right? You're like hanging out with the locals. Like, they got the downtown there. Red Hook is very cool. So Sapphire Beach is over there from what
the Caribbean is a very Florida man place to visit, most definitely.
And in looking last night, I found a beach house for you. I sent it to you. I found a beach house that I think would be perfect for you and the family. So I sent it.
A beach house in the Caribbean.
St. Thomas, right in Maggins Bay, the nicest neighborhood.
I'm not buying a beach house in the Caribbean. I'm never going to be
Rare
there.
real estate assets. I think you would be there all the time.
So I want to ask the chat here. So my family and I, we've been looking for a beach house in the Avalon, Stone Harbor area, right? The 7 Mile Island. This place is freaking awesome. Good eats, the whole thing. You know, originally I wanted to be on the island because, like, if I'm going to be here, I want to be here, right? Yeah. But, and I, you know, they have like kind of little offshoots off the island where you have like little islands off the main 7 Mile Island. But, you know, I thought that was like, you know, where the peasants would go because they couldn't afford the main island. Like, that's what I thought, right? Ignorantly. But I've been kind of like, you know, checking it out. We got a golf cart. So kind of just rolling around, checking it out. You know, I got to tell you, being off island, like just like a block from the island. And when you talk about bridges, it's like a canal. It's like a little mini bridge. So it's not even like, it's not like the Rickenbacker Causeway or like, you know, something monstrosity. You know, it's just like a little canal, little
island bridge.
So being a block or two off the island in one of like the offshoots of the island, it's a lot quieter because there's no reason for you to be there unless you have a house there, as opposed to the main island where you got your bagel shop and the bars and the restaurants and the this, and you got trucks dropping things off. On the offshoots, it's a lot
Where
quieter.
would you rather be, though?
So I've kind of like, I've thought about it. I used to think it was like where the peasants would go that can't afford the main island. I'm thinking like that's the special part. And by the way, it's slightly cheaper.
You want to be
not. I wish it was cheaper, but it's slightly
you want to
cheaper.
be near the stuff, right? But a lot of times the nicer neighborhoods are not near the stuff, right? They're set away a bit, so it's a tough decision a lot of times.
No, I'm thinking about it. So anybody who's familiar, if anybody wants to chime in, shoot me an email. I'd love to hear your thoughts. But I'm thinking now, not only am I considering being off the island, I kind of want to be. I kind of
like it.
So just wanted to throw that out there. Just keep an open mind. Very open-minded around here. I was all wrong. I thought it was a negative being out there. Now I'm thinking it's a positive. So, all right, that's what I got. Ladies and gentlemen, 1 o'clock today, the Commodities Corner with Steve Strazza, Chief Market Strategist of All-Star Charts. We got our commodity trading advisor, Mr. Jason Purr, is going to be in the house as well. Investors don't have exposure to natural resources.
Not enough.
Good.
Not enough.
Tough shit.
If you don't, if you're one of those people, if you feel that way, you got to join us today. It's going to be so good.
Dude, everybody's in that boat. By the way, I'm here pounding the table about commodities. I can tell you that I lack exposure.
Yeah, I'm the same way. I'm the same way. I feel the same way.
I am lacking exposure to natural resources. I guarantee you most of you are too. So I will see you guys at 1 o'clock today. I am JC Parets signing off. We got Steve Strazza. We got Alfonso. We got Izzy on the 1s and 2s. Spencer Israel taking care of the new baby. We're rooting for you, buddy. Hopefully you can mix in a nap every now and then. I know how that goes.
Out, Daddy.
So I will see you on Monday. Happy Crypto Fridays. Hit them straight, Strazza. Catch you on the next one.
Have a great weekend, everybody.
Adios.
I can't take no loss. I don't even know what it costs. I hit the ground